Welcome, ambitious teens, to a world of endless possibilities. Congratulations on tuning into this video, showing that you are determined to take control of your financial future and make your dreams a reality. In a world where instant gratification reigns supreme, you have already set yourself apart by prioritizing your long-term goals and investing in your future. Are you ready to break free from the mold and carve your own path toward success? If so, you're in the right place. Today's video is dedicated to helping you kickstart your investment journey so that you can secure your financial future and live the life you've always dreamed of. Investing can seem daunting at first, but with the right guidance and resources, it can be a powerful tool to build wealth and achieve your financial goals. We'll take you step by step through the process of getting started with investing, exploring different investment options, and providing you with the tools and knowledge you need to succeed. So sit back, grab a notebook, and get ready to embark on a journey toward financial freedom and success. Let's dive in. Step 1. Educate yourself about investing. Before you start investing, it's important to educate yourself about the basics of investing. This includes understanding different types of investments, such as stocks, bonds, and mutual funds, as well as the risks and rewards associated with each. Educating yourself will help you make informed investment decisions and avoid costly mistakes. Let's say you want to invest in a particular stock because you've heard it's a hot stock that's been performing well lately. Without educating yourself about investing, you might not realize that past performance is not a guarantee of future success. You might also not be aware of the risks associated with investing in a single stock. If you do some research and educate yourself about investing, however, you'll know that it's generally a better idea to diversify your investments across multiple stocks or other types of assets. You'll also know how to analyze the fundamentals of a company, such as its financial statements and management team, to determine whether it's a good investment. By taking the time to educate yourself about investing, you'll be better equipped to make informed investment decisions that align with your goals and risk tolerance. This can help you avoid costly mistakes and maximize your returns over the long term. So, how can you educate yourself about investing? Here are a few tips. 1. Read books and articles. There are plenty of books and articles out there that can teach you the basics of investing. Look for books written specifically for teens or beginner investors. 2. Watch videos and take online courses. YouTube is a great resource for learning about investing. There are plenty of channels dedicated to teaching investing to beginners. You can also take online courses to learn more about investing. 3. Talk to a financial professional. If you're unsure about where to start, consider talking to a financial professional. They can help answer your questions and provide guidance on how to get started. Second step is, set your investment goals. Have you ever heard the saying, if you fail to plan, you plan to fail? Well, it's certainly true when it comes to investing. Without clear investment goals, it's easy to get lost in the sea of financial jargon and investment options, making it difficult to stay on track and achieve the success you deserve. But fear not, because setting investment goals is the secret to your success. By defining clear and achievable investment goals, you'll be able to determine how much money you need to save and what types of investments are best suited to help you reach your goals. Not only that, but it will help you stay motivated and focused on your journey towards financial freedom. Let's say you're saving up to buy a car in 3 years. You've done some research and determined that you need $10,000 to buy the car you want. Based on your time horizon, you decide to invest in a mix of stocks and bonds that's appropriate for a 3-year time horizon. You set a goal to save $300 per month for the next 3 years, which will give you a total of $10,800 if you earn a 6% return on your investments. You choose a mix of mutual funds and ETFs that align with your investment goals and risk tolerance. By setting clear investment goals, you'll be able to stay focused and motivated as you work toward your financial goals. You'll also be able to make informed investment decisions that align with your needs and risk tolerance. So, how can you set investment goals as a teenager? Here are a few tips. 1. Determine your time horizon. Are you saving for a short-term goal, such as a car or a college application fee, or a long-term goal, such as retirement? Knowing your time horizon will help you choose the right investments. 2. Calculate how much money you need. Once you've determined your time horizon, calculate how much money you need to achieve your goal. This will help you determine how much you need to save and how long it will take to reach your goal. 3. Choose investments that align with your goals. Different investments have different levels of risk and reward. Choose investments that align with your goals and risk tolerance. For example, if you're saving for a short-term goal, you might want to choose low-risk investments, such as a savings account or a money market fund. Third step is select investments. Once you've educated yourself about investing and set your investment goals, The next step is to select the right investments for your portfolio. As a teenager, you may have limited funds to invest, so it's important to choose investments that align with your goals and risk tolerance. When selecting investments, it's important to choose companies that you believe in and have confidence in their potential for growth. As a teenager, you might be interested in investing in companies that you know and use in your daily life, like Apple, Nike, or Amazon. For example, let's say you're interested in investing in Apple. You could start by researching the company's financials, including its revenue, earnings, and cash flow. You can also look at their stock price history and read news articles about the company's latest developments and product releases. Based on your research, you may decide that Apple is a good investment opportunity because they have a strong brand reputation, consistently release innovative products, and have a history of financial success. If you believe in the long-term potential of the company, you can purchase shares of Apple stock through a brokerage account. Remember, investing in individual companies can be riskier than investing in diversified portfolios, so it's important to do your research and understand the potential risks and rewards. As you gain more experience and knowledge, you can continue to adjust your investment strategy and portfolio to align with your changing goals and values. Fourth step is open a brokerage account. Before you can jump into the exciting world of investing, you need to open a brokerage account. Don't worry, it's not as complicated as it sounds. As a teenager, you'll need to have a parent or legal guardian help you open the account since you're not yet 18. Together, you'll gather some personal information, like your name, address, and social security number, as well as some financial information, such as your income and net worth. You'll also want to discuss your investment goals and risk tolerance, so you can select the best brokerage account for your needs. Now you're ready to dive into the world of brokerage firms. There are many different options to choose from, each with its own unique benefits and features. Some popular choices for beginners include Robinhood, TD Ameritrade, and eTrade. Look for a brokerage that offers a user-friendly platform, a wide selection of investment options, and low fees. Once you've selected a brokerage, it's time to start the account opening process. This typically involves filling out an online application and submitting your personal and financial information. You'll need to provide documentation, such as a copy of your driver's license or passport, to verify your identity. After your account is approved, you can transfer funds from your bank account to your brokerage account and start investing. It's important to start small and diversify your investments to minimize risk. As you gain more experience and knowledge, you can continue to adjust your investment strategy and portfolio to align with your changing goals and values. Opening a brokerage account may seem daunting, but it's an important step toward achieving your financial goals as a teen. Plus, it's an opportunity to learn valuable skills and gain financial literacy that will benefit you for the rest of your life. The last step is buy your selected investment. Alright, you've done your research, set your goals, selected your investments, and opened your brokerage account. Now it's time to put your money where your mouth is and actually buy your chosen investment. This is where the rubber meets the road, the moment of truth, the final countdown. You get the idea. First things first, you need to have the dough to throw at your investment. This means transferring some of your hard-earned cash from your bank account to your brokerage account. Once you've got that sorted, you're ready to make your move. Now you have a couple of options when it comes to buying your investment. You can go with a market order, which is like buying something at the store. You pay the current price and take it home. Or you can go with a limit order, which is like haggling with a street vendor. You tell them the maximum you're willing to pay and wait for them to accept your offer. The second option takes a bit more patience and strategy, but it can pay off big time. Once you've made your purchase, you're officially an investor. But don't go cracking open the champagne just yet. You need to keep a close eye on your investment. Use your brokerage account to track its performance, and be ready to adjust your strategy if things start to go south. Remember, investing is a marathon, not a sprint. It takes time, patience, and discipline to see real results. So go forth and conquer the investing world, my young Padawan. You've got the tools and the knowledge to make smart financial decisions and build a bright future for yourself. Just keep learning, stay focused, and don't be afraid to take risks. That's where the real rewards lie. I hope you've learned a thing or two about how to get started in the exciting world of investing. Remember, investing can be a powerful tool to help you build wealth and achieve your financial goals. But it's not something to take lightly. Make sure you do your research, set realistic goals, and stay disciplined and patient over the long term. And most importantly, don't forget to have fun. Investing can be a fascinating and rewarding journey, full of ups and downs. Before we sign off, make sure to hit that subscribe button and turn on notifications so you never miss out on our latest content. We're here to help you on your investing journey and provide you with valuable insights and tips to help you succeed. And if you have any questions or topics you'd like us to cover in future videos, let us know in the comments below. Thanks for tuning in, and happy investing.